Hello, hello, hello. What's going on, guys? Make sure you let me know that you joined. Welcome to episode 82 of the Homefront. Super excited to be back. We had a little bit of break from the Homefront, and now I'm going to talk about hopefully something you guys would like to hear more about. So make sure you drop your name in the comments, where you're from, so I can say hello. And let me see. I'm actually going to go through what's called an ALTA statement, which is a statement from a closing. I'm not going to obviously tell you exact amounts, but kind of want to give you an idea of closing costs and what they are generally consist of. Hey, Michael. Hey, Valentine. What's going on, guys? Thank you so much for joining me. I come to you guys Monday through Friday at 9 o'clock Eastern Time to kind of give you a little bit of information about real estate, hopefully something that you need to know about or something that is beneficial to you. So share this out so you never know who is on your timeline that could use this information. I appreciate you guys joining every evening. Hey, Allah, what's going on? Thank you for joining. So we will go ahead and get started. We are on episode 82. Super excited. Let's see. So I'll kind of give you an idea. Each state has different closing costs, but in Virginia, we have certain things that I'll kind of walk through. For example, in the county that I'm in, our tax rate is 0.99. And that is going to be your personal property tax here. In Prince William County, which is just one county north of us, it's a 1.12 tax rate. So it varies a little bit from county to county. And when you are closing, you're going to pay, what they do is they figure out the total amount for the year and break it down by day for that month. Hey, Dario, what's going on? Mario, thank you guys for joining. How are you doing this evening? We are talking about closing costs. Different states have different closing costs. Hey, Yancey, what's going on? How are you? So like I mentioned, Stafford County has a 0.99% closing or tax rate for personal property. So when you see that line item on your ALTA statement at closing, basically what they're going to do is charge the seller from the beginning of the year to that day. And then you, as the buyer, if you're the buyer, you're going to see from that day for the rest of the year. So on each side of this ALTA statement is going to be a debit and a credit for either the buyer or the seller. And that's how they balance it out. So you'll have your taxes. So for this particular property, they closed on the 29th of the month and they paid adjustments. They paid around $17 for a couple of days. And then the seller got credited for that amount. So then you have your loan charges. Thank you so much for sharing, Mario. Really appreciate it. Loan charges are going to vary. Again, it depends on if you're getting charged points. There's processing fees, underwriting fees, appraisal fees. Typically, you pay the appraisal fee out of your pocket, which I see it generally as $475. That's paid in advance. On this particular ALTA statement, the underwriting fee was $585. The processing fee to the mortgage company was $580. And then there were points charged, which is another fee, maybe charged for any particular reason, could have gotten a lower rate of $2,147. Then you have a credit report, which is a standard fee. This one was $90. You have a flood certification that gets done. That was $14. These are all pretty standard as far as those types of fees go. You have mortgage insurance premium. And this one, now this is going to be, I want to say this is your PMI, $5,908 for this particular ALTA statement. It says to the Department of HUD. So with that being said, and it's also dependent upon the type of loan that you have. Your PMI is that percentage that you pay each month in your mortgage payment when you're putting less down than 20%. Certain types of loans don't have it, which one in particular would be a VA loan, or if you're doing a loan and you are putting 20% down, you're not going to have to pay that. But any other type of loan, generally you're going to have to pay that if you want wine at closing. Wine is always good. What's going on, Tracy? Thanks for joining. Blaine, how are you guys doing? Then you have your title abstract, title exam. Your title abstract in this particular incident was $200. Your title exam and closing was $795, and a recording fee of $40. That's pretty typical, $40 for a recording fee. And that's usually per lien that goes on the property. Then you have your prepaid interest. You have certain things that are going to go into escrow, and things like your homeowner's insurance. They want a year of that in advance. They may take a couple, maybe a month or a month and a half in advance at closing for your mortgage payment. So that's taken care of. You don't have to deal with that. They may take, they're definitely going to take property taxes. In this particular case, they took 4 months of property taxes because they like to have what's called an escrow account set up for you, where if you do it this way, if you set your mortgage up where you're paying your taxes and insurance, the mortgage company will pay it for you. And I always encourage my clients to do it, have it set up, because it's just something that you don't have to worry about doing. You don't have to worry about the tax bill at the end of the year, and they pay your HOA. You can, after your first year, have your pay your HOA yourself if you want to. You can have it taken out, or you can switch carriers. I mean, I've done both. Well, I haven't done both. What I'm saying is, I've switched insurance companies, but I still have it taken out of my my escrow account. I prefer it that way. It's a lot better. Krista, $795, is it part of an attorney fee or separate? Let me go back to that one. It says title exam and closing to the settlement company. That's just $795. Let me look and see if there's an attorney charge on here. I've seen them on here before, but I don't. There's an owner's policy for your title insurance, and then there's a lender's policy. Title charges, there's a closing, I don't know. This one's for title insurance of $20. I think that's it. I think that's just their title exam and closing, $795. Then you have your title abstract, which is $200. That's separate. So I want to say that that's it, because I don't see an attorney's fee on here. What we have in Virginia is called a grantor's tax. In other states, it's called a transfer tax. And I know specifically in Delaware, they have a 4% tax rate, which is crazy. In Virginia, we have the grantor's tax, which is about $1 for every 1,000. So to kind of put them on similar grounds, I was talking with someone, he said it's about $40 for every 1,000 in Delaware. So they have a crazy tax rate up there. Then you have your commissions, which typically comes out of the seller's cost, and that's going to be factored in. But again, that comes out of the seller's money. The seller pays for that, and they do that. They agree to that amount when it's listed. Got it? Transfer tax. Let's see. Grantor's tax. Then you have your state recordation tax. So that's, in this particular case, was $1,700. You have your recording fee, which is the deed for the county. That's a $43 fee. Then you have your recording fee. Let's see, this one was a recording fee to the county clerk. And this says, again, recording fee to the clerk in the circuit court. So it looks like that is 2 separate fees. It's listed, this one is for the deed, and then you have one for the mortgage. Those are pretty low fees. This one was $43, and the second one was $56. Your local recordation tax, which was your county tax, for $577. Then you have your payoff, and typically there's a fee per lien that you pay off, but they figure that out as of the day you close. So you are going to pay interest rates. You know, you have your homeowner's premium, and then if you get a warranty, which could run up to, we usually estimate them at about $450. Hey, Derek, what's going on? Thanks for joining this evening. And then, you know, you can include some of your repairs in there as well. This particular one, the owner was able to have their contractors charge them at closing, so they didn't have to come out of their pocket. Not all the contractors are willing to do that, but some are. Typically, your pest inspection will come out at closing. And then you have they included the HOA in there for 1 month. Hey, Valentine, what's going on? And this particular HOA had a setup fee of $50. So it's quite a bit of fees, but you know, depending on if you have down payments due, if you don't have any down payments due, which is Again, that's dependent upon your loan type. Those are just some ideas of what some of the fees are. I typically estimate for the buyer, for just closing fees, about 3% of the sales cost or the sales price. And then that doesn't include down payment if you have one. So if you think about it, let me get my calculator out here. Give me 1 minute. So if you're going to pay $250,000, you would essentially estimate about 3%. And that's how I figure out what we ask for the seller to give a closing credit towards. So we'll say we ask them to give us 3% of the sales price, so that way the buyer doesn't have to come out of their pocket with anything. And it really helps if they just don't have the cash or they want to save the cash. So 3% of $250 would be $7,500. And then in a sale like that, the buyer or the seller would pay about 1%, and that does not include commission. So when I tell my sellers, well, your closing costs are going to be about 1%. So in that incident, the seller's closing costs would be $2,500 plus commissions. Your buyers would have to pay $7,500. I say about 90% of the time, buyers will ask for closing costs and will probably get it. They may not get the full what they're asking for, but they may get a good percentage. It's a negotiation piece, and it's definitely something that I always try to get for my buyers so that they can have less out of their pocket. Typically, our closings run between 30 and 45 days, depending on loan type. I give a little bit longer for the USDA loans, because they have two underwriters they have to go through, so they need a little bit more time. And in particular, the last couple weeks have been funny because I have had all my closings thus far pushed back by a week at least. Every closing that I've had so far has been pushed back by a week. This one in particular, the one that I was waiting on, we got pushed back again this week, was because the USDA loan, it had a backup with their RD department, which is the underwriter. They basically give the final approval. So because of the holiday and they said they're short staffed, they're backed up. They were 2 days and now they're 5+ days. So we do have to wait for them. I mean, my client has gotten full loan approval, but we're just waiting on the USDA to approve it. Hey, Lisa, what's going on? And Valentine says, hate home warranties. Now, I would love to hear why you hate home warranties. I think they're a great benefit for the buyer because it protects them with their appliances for the first year while they're in the property. I carry my home warranty. It helps to reduce costs of anything that may break in my house. You know, you just pay your deductible and they'll come out and they'll fix it. At least it reduces the cost. It's not going to completely cover all of it, but it does help out. So, and you hate an underwriter. I think you just don't like the process of the home loan or purchasing and selling. But I'd love to hear what you hate about it. Like I said, in a home loan process, everybody has to touch the paperwork. It's it can be very frustrating for the person that is actually going through the process. When I was purchasing my home, I felt like they needed everything but a sample of blood because there were so many pieces of paper that they asked me for. I literally cried at one point during the process because it's stressful. I mean, you get to that part where you're signing and it's easy. I had one client tell me the day before closing, he was like, I'm just done. I can't deal with this anymore. I'm like, you're right here. You're just here at the finish line. So, you know, you got to be patient. But you know what? Valentine, they may say it's a pre-existing condition, but if you can document that it was something that was working and functional when you closed, for example, your walkthrough, then you might have to fight them a little bit, but you got to get a good company too. So just keep that in mind. My house was brand new, so I can't see them telling me anything was pre-existing for sure. But you should be able to document that it was functional. What's going on, Benjamin? Thank you for joining. But it's a frustrating process. The home loan process they've gone from no documentation to everything under the sun. So you just have to understand you have to be flexible. It takes time. And some things we just don't have control over. We can try and minimize it for you and make it as smooth as possible. But keep in mind, you've got to be flexible because there's way more than just a few people involved. There's a lot of people. You've got on the loan officer side, you've got the loan officer, you've got the assistant, you've got the processor, you've got the underwriter, you've got everybody involved. And a lot of times what happens, unfortunately, is they're not talking. So you've got one person calling you, and then you've got another person saying you need a piece of information or a piece of paper, and they haven't talked, and it can get messy sometimes. So if you start to get frustrated, vent with your real estate agent. That's what we're here for. Underwriters are good that we still had a bubble in 2008. That's different. They weren't validating any information back in that time. They were doing no-doc loans. So you can't really say that about 2008. Those were different times. They didn't need anything then. Now they want everything under the sun. Trust me, it has changed. It has changed dramatically. Like I said, when I bought in 2013, it was extremely stressful. They wanted everything, papers that didn't make a difference from 10 years before, they wanted to see them. Now they still want a lot of documentation, a lot of paperwork, a lot of explanations. You basically have to stop using your own money unless you have a paper trail for everything. They say no large cash deposits. You don't want to have to write an explanation for that. It can be very frustrating. But at the same time, what's the reward? You're buying a house. You have a brand new home that you're going to be living in. So with all that in mind, it can be frustrating. It's a huge milestone, but you get a huge reward and you're really accomplishing something. In 2020, they will pull something. You're right. I agree. Things are always changing. They change every year. They change every couple of months. So we'll see what the future has to hold. I know that I've heard that they've relaxed some things. So we'll see how that goes. I think they definitely need to pull back from the strenuous things that they were asking for, because it's very frustrating. I think at some point, $300 is so big for them. What do you mean? What does that mean? $300 is so big. I think they were asking for a lot of documentation. Sometimes some of that stuff doesn't even make any difference. Like I said, they're asking for documentation from 10 years ago. What difference does it make? Why do you need that? I understand the risk. It's a lot of money. You're borrowing a lot of money, but at the same time, don't be over the top with it. Hey, Dennis, thank you for joining. What's going on? We were discussing closing costs, kind of going through an explanation. If anybody has, large deposit to explain. I don't know if $300, I don't know what their limits on explanations, but I've just heard over and over again, no large cash deposits. If you're using your money, and you have a paper trail, that is okay, but no large cash deposits. And I don't know what the limit on that is, or what the amount that they want to see an explanation for. So, but when you're going into that process, you should know this is what you're going to deal with. So just hold on to it. I mean, you can put it on hold for a little bit while you're going through this process if you really want to buy the house. It's a pain, I know. When my brother was going through it, he was upset with me. He's like, I can't even use my own money. I said, just relax. You'll get through it. It'll be better, and you'll be happy once you get through it. But you have to get through the process. It's a pain. It really is a pain. It's a pain for everybody involved. Trust me, because I get it all the time. For me, $300 I transferred to 5 other accounts, and they got, you're talking about 5 other accounts. So you've got all these large deposits or transfers going through, and they want to know what's going on. You have to understand that's part of the process. I mean, I get it. It's frustrating, but they have to know, again, the risk involved. They want to know that that's your money, that it's not coming from outside sources. I understand why they do it. It's to protect the bank, but at the same time, it's a pain in the ass. I get it. Hey, Barbara, what's going on? Paul, thank you guys for joining. We are wrapping up our discussion on closing costs this evening. If you have any questions or I can help you in any way, please, please, please let me know. I would love to help you. I would love to answer questions, assist you in any way with the real estate process. Feel free to send me a direct message, or I'm on YouTube. All my videos are on YouTube. I'm on Snapchat, Twitter, all those things. You can visit my website at Krista Sells VA if you just want to start the home search, or you can get in contact with me and I'll get you pointed in the right direction. Yes, maybe an underwriter should be required to own multiple homes to understand better a home. I mean, I get it. I absolutely get it. But they're just doing their job. So cut them a little slack. Everybody is just trying to do their job and cover themselves. So, you know, it's the way it works. It is what it is, and you can't get around it. So, thanks again, you guys, for joining. Hey, what's up? The Law's in the house. Thank you for the likes, Lawrence Thompson. I appreciate it. We are just wrapping up here talking about closing costs. I appreciate the support, Lawrence. You always come through. And Kala, what's going on? Here we go. I say I'm going to wrap it up, and then I start going off again. But I appreciate you guys joining all the time. I was just watching Home of the Hustle. No slag here. It's a big boy game. Yep, it is. It's definitely, it's a big boy game and it's a big girl game. You got to put your big girl pants on to participate in things like this. So it's definitely, I wouldn't say it's fun, but when you're done, you're excited and you get to celebrate. So it's definitely a good thing. But again, I appreciate you guys watching the show. Any kind of topics that you want to hear about, any questions you have, please feel free. I love to discuss things that you guys are interested in. I like to see you engage in my live cast. That's what I'm doing this for. I don't do this to hear myself talk. I don't do this for me because obviously I already know. So anything that you would like to help or need help with, please let me know. I'm here for that reason. I am here to help and happy to do so. So I will talk to you guys tomorrow. See you later.